Hello and welcome to another episode of Ezoic Explains. I'm Whitney Wright, and today I'm going to be talking about how coronavirus and the larger global economy is affecting ad rates. Many have questioned whether the global outbreak of the coronavirus would actually boost ad rates because as more people are quarantined, made to work from home, they will be on their phones and computers more. But as we've seen, that is not the case. In fact, ad rates have stayed pretty stagnant the last couple of months instead of following previous Q1 trends, and they're likely to stay that way or even dip. And in order to get a reason why, we have to first look at the market because ad rates follow the market. So the stock market is currently seeing some of its worst numbers since the 2008 recession. Specifically today, March 9th, 2020, when we are recording this, stock prices dropped significantly during its after hours. The Dow actually logged its biggest point drop in history and had the worst day it has seen since the recession, October 2008. Additionally, S&P and the NASDAQ declined, and they both had their worst days since December 2008. So a lot of these drops are largely due to a big sell-off during the day, which can most likely be attributed to the current oil market between Saudi Arabia and Russia, but a lot of it is because of fear of coronavirus or COVID-19. And I think it's safe to say that the market is going to drop and or stay low while coronavirus is still largely globally unchecked and untreated. So this began earlier this year. Part of the stock market's original dip was because many companies worldwide used China for manufacturing or assembling. For example, Coca-Cola grows their corn here, but then they ship it to China, and Chinese make it into corn syrup, and then they ship it back here so that we can use it to make Coca-Cola. Ironically, Purell is also way behind in production because they too work with China, but now that piece of the production line is currently missing. And that's true for many of the companies in the US around the world, which is why a lot of these companies are struggling and the global economy is diving quite a bit. So this has a ripple effect on everything else in the market. People aren't traveling as much. People aren't going out to eat as much. They're not using transportation. They aren't even shopping. They're not using oil. So those prices are going down. And this will continue while coronavirus continues to impact global health and economy as more people are staying home than going out. So what does this have to do with ad rates? If there's a dip in the stock market, you can almost guarantee that ad rates will follow. So why is this? If we look at ad rates over the past couple of years during Q1, they all tend to follow the same pattern. So beginning of January, it's always a bit slow anyways because holiday ad campaigns have ended. Companies take a little bit more time to get their 2020 strategies rolling. So we have come to expect the seasonal change and dip in ad rates after the holidays. It's just the way it is. And then typically in the past couple Q1s, you can see a little bit ups and downs, but mostly February, March, you see it rising once more, especially as the marketing departments and the companies need to finish their Q1 budget at the end of March. But we aren't really seeing that happen this year. As companies continue to lose money, one of the first things that they're going to cut from their budget is digital ad spending. Because there's typically no contracts involved, it's pretty easy to cut a campaign or add one back in. And that's currently one of the major reasons why ad rates have been dipping lately. And they're likely to continue following that pattern or following the greater pattern of the global economy. Everything has a ripple effect on one another, and no public company wants to come out with their Q1 numbers looking bad to stock investors. So if they're able to pinch some money to stay in the black, they're most likely going to cut digital ads. So while many people are probably troubled by the low ad rates, the global economy at large, this also goes the other way. So when there's a spike in the market or it's having a good year, you can expect there to be a surge in digital ad spending as well, especially as companies try to then beat their competitors back to the digital ad space so that they get the most exposure without any competition there. More people will be spending money buying things offline and online. Companies can spend more on advertising, including digital advertising, which increases ad rates. So while this currently does feel concerning because the ad rates are so low, we have to look at the bright side that also when the market is good, ad rates are also significantly better. So, and this actually in the US, we are going to see a big rise in ad spend over the next 9 months because this is a presidential election year. If you look back at ad rates, every 4 years there is a rise in ad rates, and this is because political advertisements and content flood the offline and online space. So while the ad rate and the market isn't doing great right now, or as predicted, we are likely to see this recover in the latter part of the year, especially as election day comes closer and closer. And as usual, whatever happens to the American economy generally affects the economy worldwide. So we're likely to see a bit of general economic improvement across the world from the election. So for right now, obviously with COVID-19, you're going to see some lower ad rates. But on the bright side, it's going to see a positive uptrend as the year goes on, especially as it nears November and as the economy recovers. And that's it for this episode of Ezoic Explains. I hope that helped you gain a better understanding of how ad rates are affected by the global economy, especially with something like coronavirus acting globally. If you liked this video, subscribe to our YouTube channel and to our Ezoic Explains playlist. We have many other playlists, including a video playlist just for our podcast series. And you can find us on Instagram, Twitter, LinkedIn, Facebook, or at ezoic.com. We also have a blog at ezoic.com/blog. This has been another episode of Ezoic Explains, and we'll catch you next time.